Seed here with a deep dive on SPYD, the SPDR Portfolio S&P 500 High Dividend ETF. This fund just got upgraded to a Morningstar Medalist rating of Gold, and it's yielding double the S&P 500. But here's the thing, it's also underperformed the market. So should you buy, hold, or sell? I'll break down everything you need to know about SPYD, including who should own it and who should avoid it. As always, here is a quick reminder. This content is educational, not personal financial advice. Always check with your financial advisor. Hey everyone, before we jump in, don't forget to subscribe to our YouTube channel and smash that like button. You'll never know which one of Seed's friends will pop in, and trust me, there are more friends on the way. Now let's meet some of Seed's closest pals.
Let's start with what SPYD actually is. This ETF holds the 80 highest yielding stocks from the S&P 500. Not the best companies, not the fastest growers, but the ones paying the biggest dividends. Think utilities, real estate companies, and mature businesses that return cash to shareholders. It rebalances twice a year and equally weights holdings, which is different from most funds. Here's what I love about SPYD. First, the cost. It's one of the cheapest dividend ETFs at just 0.07% expense ratio. Second, it's rules-based. No manager making emotional decisions. Third, the Gold Morningstar rating means top-tier management and process. Fourth, the yield is currently around 4 to 5%. That's double the S&P 500 average. But now the concerning parts. SPYD is heavily concentrated in real estate and utilities, while having almost no tech exposure. That sector tilt explains why it underperformed the S&P 500. When tech stocks soar, SPYD lags behind. It's also rated as aggressive risk, despite holding dividend stocks, because these sectors can be volatile and interest rate sensitive.
Want the full analysis with charts and my complete ETF recommendations? Join thousands getting the free SeedToWealth newsletter, link below.
Let me show you the performance reality. Yes, SPYD beat its high dividend category, but it significantly lagged the S&P 500. Over the past 5 years, SPY returned about 70%, while SPYD returned closer to 40%. That's a 30% performance gap. You're trading growth for income, but that's a big trade-off to understand before investing. The technical picture is interesting. SPYD is coming off April lows and has room to run before hitting resistance. But here's what matters more: the fundamentals. This fund holds mature companies with high leverage, meaning more debt. They're returning cash to shareholders because they don't have better growth opportunities. That's not bad, but it's different from growth investing. So who exactly should own SPYD? Perfect for retirees needing income now, not growth later. Great for investors who want to balance out tech-heavy portfolios. Good for anyone who believes value and dividends will outperform growth. But skip it if you're young and building wealth, if you can't handle sector concentration, or if you need to beat the market. Want to see how SPYD compares to other dividend ETFs like VIG, CHD, or VYM? That deep comparison is in my premium service, where I analyze expense ratios, yields, total returns, and tax efficiency. Premium members also get my complete dividend portfolio model. Link in the description if you want the full analysis beyond this free preview. Here's my verdict. SPYD gets a hold rating. If you own it, keep it for the income stream. The yield is attractive, the costs are low, and that gold rating means quality. But don't expect market-beating returns. This is about steady dividends, not price appreciation. And definitely don't put your whole portfolio here. Diversification still matters. The bottom line on SPYD? It's a specialized tool, not a core holding. Double the yield sounds great until you realize it comes with sector risk and growth trade-offs. Use it to complement your portfolio, not dominate it. Remember, dividends are only part of total return. Questions about SPYD or dividend investing? Drop them in the comments below.
Do you want Seed to analyze your portfolio? I'll analyze your holdings and provide a report which includes hidden investment overlap, expense ratio optimization, geographic and sector gaps, and personalized recommendations to maximize your returns. Just like today's analysis, but tailored specifically to your portfolio. See my special offer in the comments.
Next week, I'll be reviewing another ETF from your requests, so make sure you're subscribed. And don't forget to grab the free Seed to Wealth newsletter for my complete weekly market analysis and ETF recommendations. I'm Seed, thanks for watching. And remember, successful investing is about matching your investments to your goals. Keep growing that wealth.